Mr. Lemierre, the arch question for me, which I saw at Davos and I see even more now, is the chronic nature of negative interest rates. Is this an experiment that has failed, and how is BNP Paribas adapting to the reality of negative interest rates?
Well, I wouldn't say that negative interest rates policy has failed. It was decided by central banks, especially the ECB, in a given context we know well, which is the post-crisis context. And I'm sure they have supported a lot the activity. Without this, we would have seen more harshness and difficulties. And I understand the decisions they have taken, which is, in a nutshell, to continue the policy which has been decided in the past. Of course, it has impact on the banking sector. We know this, but monetary policy is decided for the economy, not the banking sector, and we have to adapt. And we do adapt. We reduce costs. We have a business model which can cope with this. So we need to adapt, for sure.
In 2011, you and Charles Dallera were front and center on the negotiation with Greece on their workout. Right now, we're seeing a negotiation in Germany on a Germanic banking workout. What would you like to see occur among a troubled German banking system?
Well, this is a good question, but this is a question on which I'll be very careful about the comment I make. We operate in Germany. We are a sizable bank for the corporate sector in Germany, and I need to remain neutral. The only point I would like to insist on is that the Eurozone deserves strong, efficient, large banks, able to compete in global competition, and to bring value added to the corporate sector, both in Europe and outside Europe. So the more the banking sector in Europe is restructured, the stronger the banks are, the better it is for the Eurozone. And I hope this is what we see today.
Jean Lemierre, good morning to you. I want to ask you about Brexit. We sit here in London just days away from the April 12th deadline that looms. We heard from Valdis Dombrovskis today. He said the EU can't mitigate all the effects of a hard Brexit. What worries you most about a hard or no-deal Brexit?
Look, we don't know what's going to happen. And this is not new. We have been in that situation for some time. And we have taken into account various risks. So what we have in the banking sector, at least we have in BNP Paribas, is capacity to adapt. We have a flexible view about what may happen, and we have various plans to adapt difficulties. So we shall do it. We shall continue to serve the clients. I do not fear massive disruption in any case. Probably, I would take a slightly different view for the corporate sector. Large companies, I think, are ready. They have done the same job. They have made stocks. They are ready to face various situations. Mid-sized companies may not have the resources to do the same, and they are maybe less prepared to a hard Brexit, both on the continent and in the UK. Now, how to mitigate this, I'm quite sure, yes.
Yes, sorry, I know that your business has been investing in the UK. Yeah, you've been investing in the UK, though. Are you concerned that you might need to move investments elsewhere as a result of Brexit?
Well, no, there are two different stories or questions. One is how to face the Brexit. And Brexit is a new situation we need to be able to face, especially in the financial sector. I think we are ready. The second question is, what about the business in the UK? And on that point, I fully share your view. We have taken the view that we should increase what we do in the UK to support the corporate sector in the UK, dealing with business on the continent and elsewhere in the world. We do it in many countries. Why not in the UK? This is an opportunity for us.